and welcome. You are listening to, and perhaps even watching, the Financial Survival Network. I'm Kerry Lutz, and today is the first day of December 2020. Yes, you actually made it through one of the most insane months. November 2020, crazier than I have ever experienced in my life on so many levels, politically, financially, turmoil, everything taking place. And you don't know who to trust. Well, you're about to hear from somebody that if you listened to, you would have made some money, and hopefully you did. Talking about Mish Schneider. And Michele, welcome back to the show. If you got any feedback, did you pay attention to Mish when she was on last time? Send us an email, kl@kerrylutz.com. Well, looking at the market now, we've kind of blown through resistance. We're rallying again. It's Tuesday. After a little bit of a down day yesterday, we're rallying up. And more importantly, perhaps, is we're seeing leadership shift from tech, perhaps, from the Fangs stocks. We're seeing banks, even the well-bitten dogs, the flea-infested dogs like Wells Fargo are going up. We're seeing energy actually coming back from the dead. I mean, I was ready to just put up a windmill because I just assumed we wouldn't be able to get any gasoline or oil or natural gas. You know, it looks like the rumors of petroleum's death were greatly exaggerated, to borrow a phrase from Mark Twain. So I guess the first question to ask you, Mish, is you had an idea that this was going to happen, and you were very favorably disposed towards it, whereas many of the market's pundits were saying there's no place for the market to go but down.
Well, yeah, I had a couple of great signs that kept me on the right side of the market. And the biggest sign was that rotation into small caps, retail, and transportation that really started happening in October. And really, once I saw that, it was very hard for me to be negative. That was one thing. So when you have retail going up, considering we're a consumer-based economy, and you have transportation going up, which is the demand side being robust. And then all of a sudden now you're seeing the manufacturing numbers coming out well, which was helping the whole small cap section. This is exactly what I've been waiting for years. For years, I've been talking about the market saying this is a tech-inspired rally, and tech does not necessarily represent the true economy. The true economy is more represented through the small caps, retail, and transportation. So I'm like, I'm finally getting what I've been waiting for. How could I possibly be negative now? So that was sign number one. The other thing is the dollar is still going down. And while the dollar is weak, it is attractive to the stock market. And the Fed is still back there doing its thing. They're still buying high-grade bonds. They're still buying junk bonds, even though the yields are up a little bit in terms of the long bonds. Mortgage rates are down. Today, there was the big conversation between Mnuchin and Powell about the fact that they're still looking at stimulus. I mean, really, at this point, what could go wrong? Of course, we know when you say that, it gets scary, but yeah.
Yeah, well, the old saying, stocks climb on a wall of worry. This is just a further reaffirmation. Those old Wall Street saws almost always are correct. Like the tree doesn't grow to the sky. This rally is only going to go so far, and then it's going to take a breather at the very least. If not, we'll have a crash at some point. All this is baked into the cake. And yet, you know, I think one of the most interesting things is that the Russell 2000, which had been moribund, the only major indice not to make a new high in years, all of a sudden came back to life. And that's the thing, that all of these rallies, I guess, and you have a lot more experience with this than I do, but all rallies on Wall Street are really counterintuitive.
Well, that's true. And that's why the public often loses money, or most often loses money, because by the time they realize that it might be real, they're getting in at the top. Only this rally has been a little bit different, because this rally has really been about, as you said so astutely, the small caps in the Russell 2000. And actually November was the best month gain it's ever had in its history, which is pretty extraordinary when you think about it. So the question really now is, what could go wrong? I mean, I say that facetiously, but not really. So I'm always looking for signs. Of course, Harry Dent came out, but he's the perma bear, saying by April, we're going to go down 40%. What he's basing that on is a couple of logical factors, even though the doom and gloom talk hasn't really worked out for anybody. But here's the things that I would be concerned about going forward, although I'm not concerned right now. But number one is the dollar. And I think, Kerry, you and I talked about this before. If the dollar goes down enough, and even though there's supply out there from the manufacturing sector, there are other areas where supply is limited, particularly in food. And right now, food has been in demand, supply chain disruptions. There is cargo sitting out there that can't get to port. Panama Canal was clogged. So what tells me now, with demand coming strong and food supply coming weaker, especially since so many farmers stopped really growing because their production was in such oversupply, what happens if we get into a food-induced inflation? That's one thing that I'm watching for. Of course, I'm trading it by buying all these food commodities, but people are looking at gold as the big tell for inflation. And it may not necessarily be the case right now, partly because I'm looking at food and partly because of Bitcoin, which we should probably talk about as well. But anyway, that's one thing that I would be looking at, is the possibility of inflation going out of control, which, with money supply, growing debt, more stim on the table, Yellen now as the chair, as the Treasury Secretary, we know she's dovish by character. That would be my biggest concern.
Yeah, so inflation's an interesting thing. For many, many years, I've been following my main inflation index, and that is the cost of a Thanksgiving Day meal, because it's consistent. There's no substitution. If part of the basket is cranberries, then cranberries are on the menu, and it's that price every year. Whatever the price is of cranberries, it's there. The same with turkey and whatever their vegetables, stuffing. Right. And this year, for the first time in probably 6 or 8 years, you had a pretty sizable bump in the cost of a Thanksgiving meal. Now, obviously, they didn't come to my house because, the meals that the hypothetical meal, I don't know where they come up with it from, but at least it's consistent, unlike every other measure of inflation. So we've had this massive expansion of the money supply, and that has to have repercussions, doesn't it?
Well, that, as I said, that's the one thing, I wouldn't say the one thing, it's the major thing that could put the kibosh on the market, because as we know, and you and I are old enough to remember, or at least I am, that in the late 70s, early 80s is exactly what the Fed had to do. They had to get inflation under control. And in those days, it was oil-based. And this is the insidious part of this whole inflation thing, is that people assume that oil is in the metrics for the Fed, and that's what really has to be the barometer for inflation. But I say oil, whether it's dead or not, is not necessarily the metric anymore. I'm looking at it as food, like you said, cost of Thanksgiving. So if this all comes to pass, the Fed's hand might be forced. So that's number one. Number two, of course, is with Biden at the helm. I've been asked a lot about, well, he's going to raise taxes, and this could be also make the dollar go up, and that could also really hurt investors. At this point, I'm not too worried about that because we don't even know what the Senate is going to be. If it's a Republican Senate, it'll be hard for anything to go through. So we'll see about that. That's, I think, another sort of ball in the air, what's going to happen with the Senate. And then, finally, really, it would be some other geopolitical situation that there's always brewing. We got the Iran situation brewing. We've got North Korea brewing. They actually expressed some concern with Biden administration that they may not be as kind as under a Trump administration has been to North Korea. So, these are the things you can't worry about. But the one thing that you really have to keep in your mind going into next year, besides having fun making money if there is inflation, which is how I started, is what that would do to the overall market.
Right. So basically we're full steam ahead until a black swan rears its ugly head.
Well, since you love cliches, here's one, long to your wrong. Really, basically, this is the bottom line. And since we have so many nice gaps on the chart, you can really use the gaps as a place to put stops if you are in the market already or looking to get in the market. Today being sort of a classic example of that, because the SPY gapped up, the NASDAQ gapped up, and so now you're over 300 in the Qs. And IWM hasn't quite taken out the highs that it made recently. It's consolidating, but if that goes through, you've got these walls here. So people should probably get a clue about how to look at a chart at the very least, so that they can protect themselves.
Yeah, well, reading charts, it seems to be a dying art almost, because the computers read it all for you and they tell you what to think and how to interpret it. But there still is a need to be able to exercise this most fundamental investment skill.
Well, unless you're like a permabear like Dent, or you are ridiculously bullish and think nothing could go wrong, there's really no other way for you to be one step ahead unless you actually know how to look at price. You understand the idea of momentum, and you also understand the idea of relative performance. And that's going to be very important as well, because look at gold. Gold right now is underperforming the S&P 500 after it had been outperforming throughout some of the springtime this year. So now you want to look at that. When gold starts to begin outperform the SPY, a clue. And how will you know that? You have to be able to look at a basic chart and see how the price is looking.
Yeah, well, I always like to say fundamentals deal with the past, charts deal with the future.
Yes, you and I are very like-minded, Kerry, because a lot of people think that it's like looking at the stars, but no, it's steeped in math. I mean, that's what all these algorithms are about, actually. So,
yeah, it's very true. And big data. But, one thing we've never really talked about is the algorithms, the big traders, the institutions, and how the little guy, the individual investor, can still get a leg up on these people.
Well, what's interesting is that it has been the little investor this year. It's been all about the little investor. I think the liquidity that they've added to the market has helped a lot. The retail investors now are starting to catch up a little bit, but for a while, up until really the fall, the individual investors were making much more money than the retail investors that were actually down money. So yeah, I think that the game has changed, and I'm thrilled about that. It's one of the reasons why you're seeing not so much the wall of worry, but out and out optimism right here, which is, of course, John Templeton says that bull markets die on euphoria, but so far, no death.
Yeah, for sure. So, yeah, when you look, so we got the Robin Hood effect, and everybody's just praying for another stimulus check so that they can put it in their Robin Hood account and watch their profits multiply. Hey, and Bitcoin, which has hit record highs. I kind of knew this was going to happen once it broke 12,000, its resistance point. Is Bitcoin destined for the stars?
Well, we actually bought Bitcoin through the GBTC, the over-the-counter, Coinbase, and we've done unbelievably well. We're up like 80% on that, almost 100% on that with the move that we're seeing today. So the question is, can it go higher? And you have kind of like with Tesla, a movement. It's not even a trade anymore. It's a movement. So if you want to look at it from some of the fundamentals, you had the oh God, their name always escapes me. The twins.
The Winklevoss twins.
Yeah. They're saying that cash is trash, and that we're going to go to 500,000 in Bitcoin. Well, let's put that in the extreme camp.
Mm.
Then you have the institutional players like Druckenmiller and Paul Tudor Jones, who started buying Bitcoin. I even heard that Buffett was interested in it. JP Morgan's coming out now and saying it's okay to look at. A couple of other big institutions are saying they're going to allocate some money towards Bitcoin. So once you get into the legitimate camp, that helps. So do I think it's going higher from here? It's also taken over a little bit as the hedge against inflation, the inflation that we've talked about, instead of gold. And gold has been more of a geopolitical play where there's no real stress going on just yet geopolitically. So yeah, it looks like it's going to go higher. I'm thinking maybe somewhere up to 35 to 37,000 from here, and then we can have another look. I also think it really needs to hold now that 19,000, or you could see another swoon like you saw last Friday. I mean, it just dropped like a rocket down to 16.5, 16.7.
Yeah. Well, one thing that I find more encouraging about it to this go round is it didn't get here from like 100. It didn't get to 19,000 from 100. It got to 19,000 from a low of around, I think, it's hard to track the numbers because they're not reliable, depending on which exchange you talk to, but somewhere around 3,500, 3,700 was its low back in 2018. So it's pretty much gone up 5-6-fold from that low point. It's not like it's gone up 100-fold. So there could very well be a lot more upside here. But at some point, people are going to think that it's heading to the moon and that there's no end in sight. And that will be the time when it gets slammed down again. And then we'll see about that 19,000 being support for it, as opposed to what it was up until a couple of weeks ago. It was resistance.
Right.
That 19,000 number really is key.
It is key, and it's holding it so far. So we'll see. But you're right. I mean, when everybody and their mother and their grandfather jump onto the Bitcoin wagon, generally that means that we're going to see some kind of a top. But for now, that hasn't happened. The news is still coming out. Everybody wants to talk about it, which is fun. And if you wanted to get in now, let's say at these levels, I think 19,000, Kerry, is a good place to look at. If you were looking at that Bitcoin OTC index that I'm talking about, which is the GBTC, you really want to see that hold somewhere around 20 at this point. The high last week was like 24.06. So we take that out, you have about a $4 risk, which if it can go up to 35 to 37,000 would probably put that somewhere at around $30 or $35. It kind of doesn't exactly go penny for penny, but it's close. I mean, that's not a bad risk reward. So
yeah,
that's
I agree. For sure. I can see some more upside for this, but it's not going to infinity yet. Maybe next year. But that was the argument, and that's why I was able to call the top back in December of 2017 so easily, because it had just kept going. Hey, going back to Tesla, all right, this is like the bellwether stock now on the stock market because it's the marriage of old line industrial America and super high tech America. And whether we like it or not, all cars are going to be electric at some point in the future. It's going to take longer than anyone thinks because there's 1.4 billion or 1.8 billion cars and light trucks in the world. And there's a replacement cycle that I just listen to people talk about stuff who know absolutely nothing about financial markets. For instance, Tesla's got billions of dollars in deposits for new vehicles, for their pickup truck, for their tractor trailer, their semi. And I listened to some guy on YouTube saying, well, they can just easily take that money and put it into sales to up their sales numbers. And this is like a total ignorance of basic GAAP financial procedures. You know, GAAP dictates what everyone can do. And there's plenty of ways to cheat with GAAP, but you can't just take a deposit, which is technically a liability, and turn it into sales and profits. So when I see that kind of stupidity, and these are the pundits who are predicting that Tesla is going to own the world, it's got to make you think twice.
Well, the other thing about Tesla that has happened is that they're actually making money now off of their software and off of their service area, which is a good thing. It's like mortgages, basically. There's the mortgage that you get, and then the way these mortgage companies make money is they service the mortgage. So it's kind of the similar theory. And also the European and China market for Tesla is incredible. It's been upgraded like crazy. And he being Elon Musk, again, like Bitcoin, he's a movement. He's not even just a man anymore. He's like King Musk. And so anybody who realizes that the guy is so well ahead of the curve wants to jump on it. And then you have SpaceX. So he's also one of the 3 space barons that are coming out right now as more and more public, with Bezos and Branson. And you just got a NASA contract with Virgin Galactic, which is here in New Mexico, which caused space to go up. But going back to SpaceX, it's sitting in the International Space Station. There's a lot of money behind it. And so you're not just buying Tesla, the car. As you said, it's a bellwether for the market. It's buying Elon Musk. It's buying the future of electric cars. And it's also buying, the last frontier of space travel.
Yeah, amazing. Really an amazing time here. And I've watched this for years and years already. The Tesla vehicles, in terms of software, battery management, and all that, are at least 5 years ahead of all the competition. Build quality, that's where they lack. But, build quality, I think, used to be a lot more important in a lot of respects than it is today. It is important in markets like in Germany, though, for sure. But there's also the Boring Company. I don't know if you've been following that. They've got 2 tunnels dug under the Las Vegas Convention Center, and they're going to expand it through the entire strip. And they can tunnel for $10 million a mile instead of like in New York City, where they're lucky to get away for $1 billion a mile. A lot going on. But we know that speculation tends to head irrational exuberance, as Chairman Greenspan once said, is alive and well and living with Tesla now, isn't it?
Yeah, and then again, let's put some numbers on it. So after the announcement about the S&P, and it took off that day, 490 was a really good point of risk. And then it went to 540. It got upgraded there. I was looking at 600. It just got to about $600, and now it's trading slightly under. So at this point now, we're going to again look for some consolidation and use that 540 level as the support. And if it starts another leg up over 600, where could it go? It's hard to say. Some people say back to 1,000, and this is after the 5-to-1 split. So like Bitcoin, don't think too much, but always have a game plan and understand that once it's the darling of not just the Robinhood investors, but everybody really. And I do know for a fact that Buffett bought into Tesla. Just go with the flow, but always know that, as you say, there's always a point where it gets saturated and it's time for you to take some profits. Don't be greedy.
Yeah, the trend is your friend, except at the end.
Exactly.
So I think we'll leave it at that. Mish, can you just tell us where we find you, how we subscribe to your service, and how we learn more about you?
Well, I am at marketgauge.com, and we have a daily blog that goes out called Mish's Market Minute every day. And that's a good little thing to read because we often tell you what our thoughts are there. We also give you some specific levels if you're more of an active trader. And Mish's Market Minute is also my Facebook page. At Twitter, which is where I'm most active, my handle is @MarketMinute. And if I may, Kerry, you can also pick up my book, Plant Your Money Tree, A Guide to Growing Your Wealth. You can get it on the website with a bonus, Amazon, or pretty much anywhere. And that also will give you an idea of following these phases, which will help you avoid these big crashes. Because if something goes from a bullish phase into a caution phase, take that for what it means, caution.
And the red flags were dominant in mid-January through February for anybody who wanted to see and accept what was really going on. But if you were like most people, you ignored it and you got slammed, and then you probably took your money out of the market, so you missed the rebound rally and you missed the record numbers we're having now. So things to think about for sure. Any questions or comments out there, guys? Email us, kl@kerrylutz.com, Twitter feed @kerrylutz, Facebook page, Financial Survival Network. We haven't been real active there lately for a variety of reasons, but make sure you go to our website, sign up for the free newsletter, financialsurvivalnetwork.com. Mish, always a pleasure. We'll talk to you again real soon.
Thank you, Kerry. You have a wonderful holiday.